Hello everyone, welcome back to Stock Market Meridian. Today is 29th July 2026 and you're watching today's pre-market report. Let's begin with global markets. Starting with the US markets, for the last 3 consecutive sessions, we have been seeing almost the same scenario. The Nasdaq closed in the red, while the remaining major indices closed in the green. Moving to the European markets, all the major indices closed strongly on the positive side, marking their 3rd consecutive session of gains. Now looking at the Asian markets, Japan, China, and South Korean markets are trading in the positive zone. So overall, global markets are indicating positive sentiment ahead of today's Indian market opening. Now, let's move to commodities. Starting with crude oil, US WTI crude is currently trading around $81 to $83 per barrel, while Brent crude is trading near $88 to $90 per barrel. Yesterday, Indian crude oil futures ended with a sharp 7.5% loss, while natural gas futures ended around 4.6% lower. Now, coming to precious metals, Indian gold futures closed in the negative zone, down around 1%, while international gold futures are currently trading in the neutral to negative zone. Indian silver futures also closed sharply lower, down around 2.4%, while international silver futures are currently trading in the neutral zone. So overall, while global equity markets are showing positive sentiment, commodities, especially crude oil and precious metals, are showing considerable weakness. Now let's check the ADR data. On the negative side, Dr. Reddy's Laboratories and Reliance Industries closed weak. On the positive side, Infosys, HDFC Bank, ICICI Bank and Wipro ADRs closed with strong momentum. The biggest highlight was Infosys. Infosys ADR ended with around 5.6% gains, indicating a strong positive signal for the IT sector. So IT stocks could remain in focus in today's trading session. Now moving to FII and DII activity. After 4 consecutive sessions of selling, FIIs finally returned to the buying side yesterday, with net buying of around 755 crore rupees. Interestingly, DIIs were also on the buying side, with net purchases of around 1664 crore rupees. So after nearly a week of weak institutional activity, both FIIs and DIIs have turned net buyers. This is showing an improvement in institutional sentiment across the Indian markets. Now let's check the economic calendar. Yesterday, India's industrial production data came in above both the previous reading and market expectations. Meanwhile, US consumer confidence data came slightly weaker. Today we have 2 major events from the United States. First, US crude oil inventories data will be released. And most importantly, the US Federal Reserve will announce its interest rate decision along with the FOMC statement. At present, markets are not expecting an interest rate hike. However, if the Federal Reserve unexpectedly hikes rates or gives a significantly hawkish signal, it could create strong negative sentiment and volatility across global markets. So keep this event risk in mind before carrying overnight positions. Tomorrow is also packed with several important economic events. We have the US Federal Reserve FOMC press conference, German GDP and CPI inflation data, the UK Central Bank's interest rate decision, US core PCE index data, US GDP data, and US initial jobless claims. So global markets could remain highly sensitive to economic data and central bank commentary over the next couple of sessions. Quick channel reminder. Before moving further, a quick reminder. I upload pre-market reports every morning before the market opens and post-market reports every evening after the market closes. So if you don't want to miss important market updates, make sure you stay connected with Stock Market Meridian. Now, coming to the geopolitical updates. Tensions surrounding the Strait of Hormuz continue to remain in focus. A senior US official addressed the ongoing diplomatic friction over maritime transit rules through the Strait of Hormuz. US officials stated that Iran is overreaching with its demands regarding the strait and said those demands have been rejected by Oman, the United States and the broader international community. Washington emphasized that the proposed agreement is strictly a coordination deal with zero tolls, tariffs or transit fees. In response, Iran's Joint Military Command reportedly declared through state media that any country or company receiving confiscated Iranian assets would be banned from transiting through the Strait of Hormuz. Meanwhile, US President Donald Trump stated that Iran has essentially agreed not to possess a nuclear weapon, but emphasized that Tehran needs to formalize this commitment. Iranian state media, however, reported that Tehran has not sought direct discussions with the United States during the last 16 to 17 days. On the military side, tensions remain elevated. Following escalating maritime threats, fresh military strikes reportedly hit regional installations overnight. Axios reported that Iranian forces fired ballistic missiles targeting a US military base in Jordan. Regional air defense systems were reportedly activated to intercept incoming Iranian projectiles targeting US installations. These developments indicate that regional military exchanges are continuing, alongside disruptions to maritime shipping and diplomatic negotiations. So, geopolitical developments, especially around the Strait of Hormuz, remain an important risk factor for global markets and crude oil prices. Now, let's check the important company-specific updates. First, RVNL. RVNL has secured a new domestic engineering, procurement and construction or EPC order from East Central Railway. The project is valued at around 359 crore rupees. The contract covers doubling work across approximately 41.04 kilometers from Kundawa Chainport to Raxaul under the Samastipur division. The project includes earthwork, blanketing, major and minor bridges, station and platform construction, level crossings and upgrades to the 25-ton loading standard. The execution timeline for the contract is 1095 days or approximately 3 years. So RVNL could remain in focus during today's trading session. Now, let's cover the companies that announced their quarterly results after yesterday's market close. First, L&T. On a quarter-on-quarter basis, revenue, net profit and EBITDA margins improved. However, these parameters declined on a year-on-year basis. Several other earnings parameters also showed weakness on both yearly and quarterly comparisons. So overall, the results indicate a relatively weak earnings performance. L&T could therefore remain in focus today. Next, Phoenix Mills. The company reported improvement across its major earnings parameters on a year-on-year basis. However, earnings declined sequentially on a quarter-on-quarter basis, mainly due to the seasonal impact and a stronger preceding quarter. Despite the sequential weakness, the overall numbers continue to indicate healthy business growth. Next, Supreme Industries. The company showed improvement in top-line earnings and bottom-line margins on a year-on-year basis. However, the numbers declined quarter-on-quarter due to a strong preceding quarter. Overall, the results continue to indicate healthy business expansion. Next, DCM Shriram. The company posted a strong set of numbers for the quarter. Major earnings parameters showed strong improvement, indicating healthy overall performance. So DCM Shriram could also remain in focus today. And finally, Birlasoft. Birlasoft also reported a good set of quarterly numbers. Most major earnings parameters remained healthy. However, net profit and net profit margins declined on a quarter-on-quarter basis. Apart from this sequential weakness in profitability, the overall results remained positive. Now, coming to the GIFT Nifty data. Yesterday, GIFT Nifty closed around the 23,988 level, and today it opened with a massive gap up of around 300 points. This is indicating a strong gap up opening for the Indian markets today. And that's all for today's pre-market report. Today, keep a close watch on institutional buying activity, IT stocks following the strong Infosys ADR performance, the US Federal Reserve decision, geopolitical developments around the Strait of Hormuz, and stocks reacting to quarterly results. Volatility could remain elevated because of the major global events lined up. If you found this video helpful, don't forget to like, share, and subscribe to Stock Market Meridian. And I'll see you again this evening with today's post-market report. Thank you for watching. Signing off, Jai Hind.